Good morning, everybody. It's Tuesday, July 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3.5 at 424. November soybeans were up 8.25 at 11.19 and December Chicago wheat was down 6.25 at 606.25. This morning, we had an export sales announcement of 100,000 metric tons of corn to Colombia, and that was for 23 old crop. Yesterday's crop conditions after the close, corn came back 67% good to excellent. That was down a couple of points from last week. It was 69% last week. Soybeans unchanged, 67% good to excellent there in the soybean complex. Winter wheat harvest, 54% complete. That was up from 40% the previous week. Winter wheat conditions down 1%, 51%. And spring wheat conditions still holding strong. They actually improved 1% to 72% in the good to excellent category. We also had crush out yesterday for May, 192 million bushels there. So another strong crush number. Dustin, maybe just a few thoughts to kick us off here this morning. I know there was, outside of crop conditions and our sales announcement, not a whole lot of fresh news, but maybe just a few things that's on your mind, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, crush margins have actually been improving. So that's one thing to kind of remind ourselves on the soybean break. They've been improving for old crop, but also new crop as well. So, forward crush demand prospects are growing. We had slightly lower acres on beans on Friday. The market's still digesting that. I think part of the discussion talked around the room yesterday was, if the forecast holds, which is actually really good for corn right now, that the market may be treating this as the corn crop is made, but there's still a chance that there's a risk for bean yields in August. And that could be part of the recent jump outside of acreage and stocks in the corn bean ratio, where beans have been gaining value on corn. And of course, this time of year is where, that ratio can really go do whatever it needs to do. It usually is held to somewhat of a range, at least prior to the planting window, because of those financial incentives, to plant one crop or the other. But after the ball's rolling and acres are decided, it kind of comes back down to supply and demand fundamentals that are not going to change production estimates. It's whatever Mother Nature provides at this point. So, I would imagine there's a lot of board crushing going on right now, just kind of forward securing those margins. We also tried to test $11 beans yesterday, and we bounced. So if we manage to be above 11.33 this week at the close, that would be a reversal for the week and a weekly reversal. So it's something to watch for. And market's still kind of deciding, like, is the corn price, even though we have plenty of supply, where does supply and demand match up? You still need to find willing sellers and willing buyers. So, maybe that happens down here. Maybe it happens lower than here. A lot of that's going to depend on yield, but we still got a fair ways of growing season left. So to see small rallies in between now and then wouldn't be that surprising to us.
That's real good. Ben, anything to add there?
Yeah, I think too, you look at the inverse that we see in beans from July to Sep. And, we know that a lot of beans moved really early this year as people held on to corn looking for higher prices. I think beans are at kind of an interesting inflection point here to kind of jump on Dustin's coattails, where they rejected a sub $11 print and bounced a little bit. Just that uncertainty hanging in the air. As far as corn goes, I think it's a market that has a lot of people want to talk about the acreage report and the addendum that was put on there, but unfortunately, that's something that we're probably not going to get a really firm grip on until we see harvested acres in January. We will get some NASS data in August, but it won't be super concrete. So I think that corn is kind of stuck here between a report that may have some changes coming versus the calendar of harvest on the horizon, and the perception that a lot of the corn crop is in really good shape.
Oh, that's really good. Any other thoughts here, guys? Like I said, there's not a whole lot of fresh news, and we've kind of we've been talking about the same thing. It seems like for 2 to 3 weeks here.
Well,
So-
obviously the report was kind of a surprise. It is funny. So now the low is still on first notice day. It'll be interesting to see if that, ends up being the case. It just all kind of capitulated. Either way, I think you have to look at things have changed from what we thought they were 2 or 3 weeks ago. And obviously that's obvious in the price of corn. But I think you kind of readjust your expectations here. What was possible 3 weeks ago is probably not possible today. Just the weather has been too good since then. We found some acres. So I think just really adjusting your expectations of what the market can give you over the next, call it a month of marketing that people need to do for cash flow and all those kinds of things going into harvest. And then also, as we talked about before, just really fine tuning where all your crop insurance fits in, get really reasonable yield expectations on your own farm, and kind of go back to that really, personalized approach with where your, all your different floors and crop insurance and farm bill payments may kick in, and try to make the best decision you can. So that's kind of the tough part about this environment.
Hey, I would just add to that too. Conversation that we've had multiple times internally for us dinosaurs that were around then. But we're kind of in that window now where I think people think, oh, you could have a year like 3 where the corn comes out in pretty good shape, and then the weather turns and beans have a problem. But I would just say, lesson learned from an environment like that is you have to be really careful about getting bullish corn when you have a bean issue that's late season. If it were to materialize, 2.5 weeks ago, we were talking about some really negative forecasts in the corn for July, and they flipped 180 degrees to maybe one of the most benign Julys that we've seen. So, corn will be a very difficult trade, I think, for people that want to buy it because of bean strength over the next 4 to 5 weeks.
Yeah. And another thing just to add there too, is just like the spreads have collapsed, which we talked about. Like there might be just really good opportunities to be, you're gonna have to do a lot of work, but try to earn carries and just kind of grind it out here with corn with some good hedges and some good, placements of those kinds of things. So there's going to be opportunities. You just have to be a little tempered here. I don't think you can say we're going to wait for $6 corn, or even $5 maybe. So
I think the other part of this, we tend to focus on corn, but when we get to if there is an acreage adjustment, you could potentially see that move stronger to beans. You could have PP, like you can let your mind go down any rat hole on how something like this could play out. But the reality is we still have to go through fall before we have a firm grip on both of those.
Mm-hmm.
I had an interesting question yesterday, Justin, and we've kind of talked about it a little bit too, is everybody's been so quick lately to just jump on finding a year, an analog, right? And, the question that was posed to me was, with the changing dynamics of the markets, it's really kind of unfair to do that. It's not, to just go pick a chart and say, well, it kind of feels like this. I think you're kind of doing yourself a disservice. So it goes back to your ideas of making it, a little bit more customized and individual versus just like, well, it's going to have to do this because it seems like it was kind of the same year. You know what I'm saying?
Yeah, it's definitely been a popular trend. And honestly, I don't think they're even that correlated, except for a bear market and a bull market. And we tend to top, in the summer. But yeah, all those years have such different circumstances that, the world was so different 10 or 15 or 20 years ago from what it is today, and I even look at like the competitors that we have, Brazil's second crop corn, I think they're 49% harvested now and against 16% last year. So that's a tremendous amount of bushels that also came on the market in a very short time as we had all these other things going on. So that wasn't the case, 5, 10, 15 years ago, that we were the game in town in summer, So it all depended on what our yields were. Now we're really competing with a giant, South American crop that's coming online in our summer. So I agree, just totally different dynamics. And you can always, find what you want to find out there. You want to find some chart that kind of looks like, you could probably find a crypto chart that looks like corn. I mean, so if you want to find something that looks similar, I mean, go for it, I guess. But I think that's kind of a waste of time.
Yeah, no, I thought it was guy that posed the question. I mean, I think it was just, you kind of felt that way, but wanted a little reassurance. We got to
can I add something to that?
Absolutely.
I look back at some of those things, and there's some guys in the industry that I respect for that like analogous charts. It's not my cup of tea, but that comparison of 14 to 24 was a wildly different situation, in that we went into 4th of July weekend. We found out on a Friday that we had it was Thursday or Friday. It was a long weekend. Managed money was really, really, really long, and the forecast was not so great. And over the weekend, it rained, and the forecast changed, and there was a mass liquidation. And now we have the opposite, and for different reasons. They're short maybe 300,000+ by now, with wider spreads. They're probably going to have a difficult time getting shook. Jason mentioned this yesterday, from that position without some major changes to demand, potentially interest rates. Rylan brought that up when we talked before. So they're looking at a highly profitable position, but it probably is, their next leg probably is going to have to be maybe towards fall, and they'll sit back and collect their carries until they can't. So fundamentally, markets are different, and they have different structures. And what Justin says about a bear market looks like a bear market, and a bull market looks like a bull market. So you can find those things. And 14 was year 2 after a big bull run from the drought of 12, and we're in year 2 now of after our big bull run. So it may or may not work. I know that you can always look at where your crop insurance level's at, figure out where your true floor is, and kind of market around that and market accordingly.
Yeah, that's another thing too, is these government programs and crop insurance levels and all those things change so much year to year. And Dustin and I were talking about this yesterday, but it does have like an invisible hand kind of influence on our markets, in a big picture. And we saw that in 2020. We saw in some of those years where you get so deep into payments that it disincentivizes like normal behavior for growers and marketing. So those things can change dramatically year to year as well. Which just it's adapt. Just goes back to Ben's point. I mean, these fundamentals, the players, the market structures, all that is so different year to year.
That's really it's really good points there, guys. Right, we got a couple of minutes here before the open. A few thoughts on livestock.
Yeah, pretty quiet here. Early in the week, no real cash indications yet. Cargill and Dodge City, Kansas was down on Monday. So I think just naturally kind of take a buyer out of the market here, and was seen as kind of a negative force. So I think just why there was a little bit more of excess pressure, just kind of coming back from the weekend. But beef markets are still kind of rocking and rolling here. New highs for the move in choice at 329.18 is up another almost $3 there. So beef is still really strong right now. I know it's bad news for you, Dan, but I mean, terrible. Wholesale is just not breaking right now. So we're not going to see it on the street yet. We got to kind of get through this holiday time period, and mark the end of grilling season before we really see, I think, anything like that. So at this point, yeah, it's just waiting for more news on cash side. So on the other hand, cutout was down in the hog market. So we saw another round of selling here. So I would say that there's more optimism, for lower prices here on the hog side of the business versus cattle for right now. So, at this point, you got the funds really short in hogs and starting to build that position over time. And it just seems like coming out of the really good peak seasonal demand. It just right now we don't have a supply problem, so they're just right now, like maybe we can get some recovery bounce here, especially just kind of going to the holiday if we do see a big uptick in some demand here. But aside from that, we're just really not moving, not finding any real support. So we'll see what
Very
happens.
good. All right, we'll keep an eye on that this week, especially with the shortened trading week here. Just to open the grain markets, we got green on the screen here. These corns up 4 1/4, 4.24 3/4. November soybeans are up 9 3/4, 11.20 3/4. December Chicago wheat is down 4 3/4, 6.07 3/4. Just one announcement here. We've got markets will be closed on Thursday for the 4th of July holiday. We'll have a normal close tomorrow, be closed on Thursday, and then the markets will have a hard reopen on Friday morning at 8:30 Central. So the War Room will be back on Friday morning. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.